Hi everyone, my name is Jarrell Ochoco, and I will be presenting about deferred taxes. What is deferred taxes? Deferred taxes is a result of the difference in timing recognition between the tax law, which is the IRC, and the accounting methods, which is the US GAAP. There are three different types of differences between US GAAP and tax law. The first one is a permanent difference. The second one is a temporary difference. And the last one is the net operating losses. Let's first discuss about the permanent difference. A permanent difference is an amount that appears in the tax return or income statement, but never both. Permanent differences do not contribute to deferred tax accounts. What are the common examples of permanent differences? First one is tax-exempt interest. There are certain interest income that, as per IRS, you don't need to recognize them as income. Hence, they are tax-exempt. An example of these is municipal interest income. But these income has to be recorded as income as per US GAAP. Second example is fines and penalties. Fines and penalties, as per IRS, are non-deductible, but as per US GAAP, you can deduct them as expense. Third example is meals. Meals expenses are freebies to your employees wherein you pay for fruits. These are deductible at 50% as per IRS, but as per US GAAP, you can deduct them in full. Entertainment expenses are non-deductible as per IRS, but you can deduct them as expense as per US GAAP. Life insurance expense are non-deductible as per IRS, but for US GAAP, you have to deduct them. Now let's go on to temporary differences. Temporary differences are an item of revenue or expense that over its total life will affect pre-tax accounting income and taxable income in the same total amount, but will be recognized in different amount in any given year or financial reporting and tax purposes. Temporary differences contribute to deferred tax accounts. Common example of temporary differences are depreciation. So depreciation is an expense on fixed asset wherein you recognize depending on the method that you use. For IRS, you're required to use makers. But for US GAAP, you have to recognize an expense on straight line method over time. The second one is stock compensation expense. Stock compensation expense are given to employees and they do have a vesting period depending on the contract or the terms of the employment. Usually, as per US GAAP, you have to recognize them on accrual basis. So you have to recognize every time they are vested. But as per IRS, you only have to recognize the expense once it is paid out. A cash accrual catch-up, by its name, it's when your books is on cash basis and you have to convert it into accrual basis, and the difference is the catch-up, which you have to recognize as a temporary differences. Fourth example is a revenue received in advance. As we all know, IRS requires you to pay taxes every time you receive cash or any forms of payment. So if a revenue is received in advance, you have to recognize them as income as per IRS. But as per US GAAP, revenue is only recognized when it is earned. The fifth example is an accrued expenses. An accrued expense is an expense that is incurred, but it's not paid yet. So again, IRS purposes, they will give an advantage on that because they haven't paid out the expenses. So these are not expense as per IRS. But as per US GAAP, you have to recognize an expense. The last example is the prepaid expenses. As the opposite of accrued expenses, prepaid expenses, as per IRS, you have to record them as expense because these have been paid out in advance. In US GAAP, you have to recognize them once they incur these expenses only. Let's go to the third type of deferred taxes. A net operating loss incurs when taxable deductions exceed taxable revenue. And this is solely within the tax code. Tax law allows an NOL to be carried forward indefinitely, and a company may offset 80% of its taxable income each year as it applies the NOL carry forward. NOL carry forward generates deferred tax asset. Thanks everyone for watching, and if you have any questions, feel free to reach out. Thank you.